All right. Today was an interesting day. I I guess I will do kind of a recap. Nothing super official. I guess they're all kind of official, aren't they? Uh, Crazy day though. So I want to start on the market profile. And if you're not looking at the price action for today, this is what that looks like. So going into today, the idea was where we open up. We're about to open up right here. So the overnight session had a 45-degree angle down. Not the best, but it's there. And um, what that suggests is this low is secure. And then what should happen doesn't. If price does come down and break that level, that's just as powerful because the low should be secure. And if we break through it, that says a lot about the weakness. Um, Looking at yesterday, that's this profile here, fairly balanced. And again, we're opening right here. And so we need to take out this point of control. And then we also have this point of control down here. That's confluent with yesterday's. Did we take it out? No, we didn't. We'll see. We definitely want to take out this point of control today. So we're opening right here. We'll see what happens. If it breaks to the upside, do you want to monitor for continuation after this low volume node? That's going to say a lot about how we interact with that area. And then this level up here is just the top of that this day, near value area low here, the start of single prints here, poor high, start of like a lower distribution. So that's a level, right, that we anticipate price interacting with. And essentially what happened was we broke for all-time highs. A period, first 30 minutes of the market went right up, broke or met this point of control, used this as support, and then the low was secure. We broke through this level, paused for a moment, broke through this one substantially, and then came back down to test and broke this level with some aggression, or at least appear so, and settled really high. you know, right here, settled right here. That's all-time highs. So anyway, what that looks like on this is one of the things that well, actually, let's do this guy first. This is the trade I took, but looking at the price action for the entire day, this is that all-time high, actually a little bit higher right there. So this is the open right here, 830. Big push in delta and volume. Okay, that's a statement, right? We come down on lower volume, but with this delta push, you're just like sort of okay, we're neutral. That's from a delta standpoint. And you can see here for the rest of the day, price continued to climb, delta stayed flat. That's why I took this short right here. All right, I thought we were going to use this low volume node as, or what was once a low volume node, we're going to use it as resistance. And this is that line, right? So we got some excess above that. We're touching the too extreme. Delta's pulling this down, so that means this leg up is weak. Took the trade. I'd take that trade again. The difference would be, so this is why I wanted to record today, but I haven't done one this week. The way I'm using delta right now is I need it to either be confluent with price, so I want delta to look more like this, and the proof in the pudding would be this high to this high, this high to the lower high. Clearly divergence. In a lot of cases, this means that this leg up is weak, which it is. You don't have a lot of delta. What you don't know is how much more absorption there's going to be. Given the context that we're at near all-time highs, given the context that we had a secure low on the overnight profile, and then also some context or confluence I'm going to get from the weekly here in a moment, that's not nothing. And it's not that it makes cumulative delta less important, or it doesn't even mean that you ignore it. What this turns into is, okay, this is a very weak move, and price is continuing to climb. Okay, we broke above this low volume node. What that looked like on the market profile was we were in C period at that point, which is C period, this guy. So what did that look like on this chart? C period. 30, soup. Like we came down here in the A period, tested this, and we never looked back. I guess let's just focus on this. We stayed in the imbalanced up. We're above this low volume node, we're above this significant level, and we're holding. So at some point it becomes, okay, there's a lot of absorbing right here, and this leg up, it is weak. It is definitely weak, but at some point it's like, okay, either the sellers or the buyers are going to win that fight, and they're going to win that fight in a substantial way. I guess that is my takeaway from today, is to not be so rigid. I don't know if you can hear my family. Don't be so rigid that you just see a divergence in delta and that automatically means that leg is weak. It does mean it's weak, but the other thing that you need to consider while you're watching price action is, oh wow, these negative delta, right? We're slapping the ask a lot more than the bid right here. It's weak, but the price keeps moving up. So buyers are absorbing this in here. And so it gets to the point where it's like, if it doesn't start to correct, then there's bigger hands at play here trying to keep price up. And you need to flip your bias to be in line with them if you can justify they're strong enough. And that's what you do. That's what you do with context. The other piece of confluence or context I want to bring in is the weekly chart that I definitely need to put more weight on. I changed it to candles, which I don't know, it's a little bit easier for me to read, honestly. Shows you a little more in depth, like right here, all these wicks to the bottom. It's like, okay, that's a good sign, right? You wouldn't want to have wicks to the top. I guess you could. That would mean this move would be just as powerful. Anyway, over the last couple of days, this is what I should have noticed, and this is what I did notice. We couldn't get above this prior value area high. Played around here, the weekly open came up, couldn't get over that. Now this is the context, you guys. Check this out. Here is our open, right here. Price came down, went back up. So we have this big drop right here, and then where sellers should take over is when we break this resistance line, right? We break this trend line. Sellers should show up, but they didn't, right? This becomes excess. If you think about this level right here being a door and the party is sellers, okay, you open the door, you check the party and there's nobody there. Okay, that's a stupid party to be at. Nobody's partying. There's no sellers at this party, but you open the door to check. Okay, if you don't see any sellers, you're forced to go to the buyer's party. So you close that door, you open a new one. Oh my gosh, look at all these buyers partying here. I'm going to jump on board with them. That's what you missed on the weekly right here. This is the open, okay? This is a textbook setup that Joe was talking about on a much smaller time frame. And if these charts are fractal in nature, the same thing happens here. Again, you break two substantial trend lines. This one right here being horizontal, this one here right here being diagonal. Sellers should have shown up. They didn't, right? Then you come back and you take back that trend line right here, or this support resistance. You take it back, and you take back this one too, right here. I'll make it easy. There's one, here's the other, okay? We broke both of those right here. Sellers didn't show up, and we came back and we took it, okay? The buyers took it back. Then you have the open right here. It's just giving you more confirmation that we're going up. This is a fresh condition shift back into developing out value right here. You have good structure going along with it. I mean, this is the trade setup right here, and you know, because it's happening on a higher time frame, that the likelihood of this move is going to be bigger. Because look at the length of this one. We're looking at rhythm. Okay, rhythm is slow. Rhythm is slow, going sideways. Rhythm is slow. We pick it up. We pick it up. We pick it up. Okay, that rhythm was telling you, hey, we're going to be expanding in volatility here. right? So that's how I need to bring in the weekly into my trading, to look at it like that. And not participating in this today sucks, because it's like hindsight's 2020. This is how I should have played the day. But enough of these happen where I either lose money or I miss the train. You just, the pain grows, and so you learn more. You study the charts. I look at this example more, and you start seeing this in real time. At least that's the idea. So anyway, that's the takeaway. Is just delta. Just because there's a divergence doesn't mean price is going to change. It could continue in the same direction, and if it does, that means that the selling pressure is just giving up, or you just have too much absorption. So, thanks for tuning in.